XRP spot ETFs have pulled in nearly $1 billion in a matter of weeks, while more than $1 billion XRP quietly vanished from exchanges at the same time. That kind of move doesn't happen by accident. In this video, you'll see how a sudden ETF flood, a $500 million Wall Street bet on Ripple, and a shrinking XRP supply could set up a 10x move, or trap late retail investors on the wrong side. Stay to the end to see what smart positioning really looks like before liquidity dries up. Before diving in, think about this. If XRP actually did a 10x from here, would you be ready? Or would you be forced to chase it at the top? Drop your honest answer in the comments, already positioned or still waiting, and listen closely to see which camp is taking all the real risk. What $1 billion of inflows really means most people hear $1 billion of inflows and think it's just another headline in crypto. In reality, that kind of capital flowing into spot and leveraged XRP products in weeks signals that professional money is no longer just speculating. It's building long-term positions. The takeaway is simple. When regulated products absorb liquidity, retail no longer sets the rules, institutions do. Start tracking ETF flows like you track price, because that's where the real conviction shows up. The $500 million TradFi bet on Ripple, a $500 million strategic investment into Ripple at a $40 billion valuation, is not a degen gamble. It's a thesis backed by deep due diligence. When firms like Fortress and Citadel step in, they're not just buying upside, they're also buying influence over the future rails of global payments. If you ignore where this kind of capital is flowing, you're ignoring the blueprint for the next financial infrastructure. Use big TradFi commitments as a map. Follow the money, not the noise. Why XRP's supply is quietly shrinking. While price action grabs headlines, the more important story is that hundreds of millions of XRP are leaving exchanges and getting locked in ETFs and custodial wallets. Fewer liquid tokens on exchanges means every new wave of demand has to fight harder for the remaining float, which makes sharp moves more likely. If you only watch charts and ignore supply, you're trading in the dark while whales rearrange the liquidity. Start treating on-exchange supply like a key indicator, right beside volume and open interest. From speculation to infrastructure, crypto used to be driven almost entirely by hype cycles, memes, and quick pumps. But the XRP narrative is shifting toward rails, settlement, and institutional-grade liquidity. When a token moves from maybe it pumps to this is core plumbing for payments, its value story changes from short-term hype to long-term utility. Positioning for infrastructure means thinking in years, not weeks, and sizing your exposure so you can actually hold through volatility. Ask yourself whether you're chasing a trade or owning a piece of an emerging system. The psychology of being priced out. Being priced out doesn't just mean the coin becomes too expensive. It means that for most people, meaningful allocations become impossible without taking reckless risk. Wall Street isn't trying to 10x in a week. They're happy to accumulate quietly while retail waits for a perfect entry that never comes. Your edge isn't buying the exact bottom. It's having a plan before the crowd wakes up and panic buys. Decide your accumulation range and stick to it, instead of letting emotion dictate every entry. How ETFs change the XRP game. ETFs take XRP from a niche exchange asset into a product that retirement accounts, institutions, and conservative allocators can touch with a click. This unlocks a pool of capital that would never bother setting up wallets, learning exchanges, or managing private keys. If you underestimate how powerful one-click exposure is for mainstream money, you'll miss why volume can ramp up so fast. Start thinking about XRP not just as a coin, but as a ticker in brokerage accounts worldwide. What Wall Street wants from XRP. Wall Street doesn't care about community memes. It cares about liquidity, regulatory clarity, and predictable rails that can move size without breaking. XRP's role in payment gateways and settlements makes it attractive as tooling, not just speculation, and that's exactly what big money can justify internally. If a token solves a real problem in a regulated context, it becomes much easier for committees and risk teams to approve it. Focus your research on what problem does this solve that traditional systems cannot. The 10 times fantasy versus 10 times setup. A 10 times move sounds like magic, but in reality, it usually comes from a mix of constrained supply, rising demand, narrative alignment, and timing. If ETF inflows increase, supply on exchanges keeps dropping, and infrastructure news compounds, the math for a major re-rating becomes more realistic. The problem is that most retail only believes in the 10x story after price has already moved 5x, when risk is actually higher. Treat the 10x idea not as a guarantee, but as a scenario to plan for ahead of time. Reading institutional footprints, institutions leave traces. Regulatory filings, ETF approvals, custodial announcements, and large over-the-counter flows that later show up in on-chain data. Where retail sees a random spike, institutional flows often connect to months of quiet positioning and legal structuring. If you learn to read these footprints, you stop reacting and start anticipating market structure shifts. Set a routine to check filings, ETF stats, and credible institutional commentary at least once a week. Managing risk in an institutional market. When institutions step in, volatility doesn't disappear. It just changes pattern, often with sharper squeezes and deeper, more engineered pullbacks. Your edge becomes risk management, defining how much of your portfolio is in XRP, your time horizon, and your maximum acceptable drawdown. Without a plan, you're simply liquidity for someone else's strategy, no matter how bullish you feel. Pause for a moment, hit subscribe if you want more deep dives like this, and commit to writing down your XRP game plan after this video. The hidden cost of waiting for regulation first. Many retail investors say they'll only get serious once regulation is fully clear, but by the time that happens, institutions will already have accumulated size. Clarity is most profitable for those who prepared ahead of time, not for those who buy only once everything feels safe. If you always wait for maximum certainty, you'll also get minimum upside, almost by design. Consider a scaled approach. Start small now, expand as clarity increases, instead of waiting for a mythical perfect moment. Utility versus narrative in XRP's future. Right now, XRP sits at the intersection of narrative, ETFs, big bets, forecasts, and utility, payments, stablecoins, tokenization. Narratives can pump price, but sustained value usually comes from tokens that get used in high-volume, real-world flows. Your best positioning comes from aligning with both, short-term catalysts and long-term usage. Ask yourself, if hype vanished tomorrow, would this still be used at scale? The role of stablecoins and tokenization. Ripple's moves in stablecoins and real-world asset tokenization aren't distractions. They're part of building a full liquidity ecosystem around XRP. Every time value flows across those rails, there's potential demand for efficient settlement tokens, and XRP sits right in that lane. Ignoring these developments means missing how the plumbing of the next financial system could route value. Start following stablecoin, RWA, and on-chain payment news as closely as you follow charts. Common mistakes. XRP. Investors. One of the biggest mistakes is going all in emotionally, then overtrading every small price move out of fear or greed. Another is blindly trusting price targets from strangers without understanding the assumptions behind them. The smarter path is to define scenarios, position sizes, and time frames that you can actually stick with. Treat every big prediction as a data point, not a command, and build your own thesis. What if the bull case fails? Serious investors always ask the uncomfortable question, what if the bullish setup doesn't play out as expected? Maybe regulation shifts, competitors gain ground, or ETF demand flattens faster than anticipated. Planning for downside scenarios doesn't kill your conviction. It protects your capital and longevity. Write down now what would make you reduce exposure, so you aren't forced into emotional decisions later. Preparing for a liquidity squeeze. If supply keeps dropping and new demand arrives suddenly, XRP could experience violent upside moves followed by brutal, liquidity-thin pullbacks. Those who chase green candles without a plan often end up buying tops and panic-selling bottoms. Your advantage is having predefined entries, profit-taking levels, and rules for not over-leveraging. Think like a professional. Volatility is an opportunity, but only if you survive it. Building a long-term XRP strategy. Instead of treating XRP like a lottery ticket, treat it like a strategic exposure in a broader portfolio. That means combining spot holdings, maybe some DCA, and a clear idea of what role XRP plays in your overall plan. A deliberate strategy helps you stay calm when the market does what it always does: swing wildly. Ask, is XRP my core bet, a satellite position, or just a high-risk kicker? Looking beyond the 10x headline. The 10x headline grabs attention, but the real story is about a structural shift: regulated products, institutional capital, and constrained supply. If this plays out, the biggest winners won't be the loudest voices online, but the quiet investors who prepared early and managed risk well. Your job is not to predict the exact top, but to ride a meaningful part of the move without blowing up. Focus less on the fantasy number and more on building a process you can repeat. So XRP's ETF surge, the $500 million TradFi bet, and a rapidly shrinking liquid supply are all pointing in the same direction: a market where institutions set the tempo and retail either adapts or gets sidelined. If you found this breakdown useful, stick around for the next video, where the focus will shift to how to compare XRP's setup with other top altcoins competing for the same institutional capital. Your edge isn't secret information, it's disciplined preparation. This content is not professional, financial, or investment advice. Always consult a qualified expert before making financial decisions.